Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. Thursday, January 15th. G Swizzle here. You see him in your screen. That's the great Carter Worth. He of Worth Charting. Before we get into the market, and the market continues to sort of do things, I'm not going to bury the lead. The Giants apparently have hired John Harbaugh. He fell into their laps. Dismissed from the Baltimore Ravens, I believe, after 19 years or 18 years as their head coach. And he comes into a giant organization that is in dire need of that type of leadership. Carter, how are you?
I'm good. I had Rangers on Monday. That was fun.
Oh.
And then last night, my daughter had a nice invite on the glass. And she said, "Why do they always lose?" I go, "Yeah, that's
an entirely different story. That the Rangers have fallen on dark times, and by the way, Amanda is doing great. I promise we'll get into the market. I've been watching the hockey since 1971. John Rattel, my favorite Ranger of all time, and this may be the worst team that I've seen constructed in those now 55 or so years, Carter Worth.
Sometimes it just doesn't click, right?
It doesn't click. Well, speaking of not clicking, let's go to the market because it has been clicking, but your charts suggest maybe we're about to sort of click the other way. So let's go to the Money in Motion that you published because this is really interesting stuff.
Well, let's see. So this was the 9th. This was the what are we now? We're about 2 weeks later.
15th. The week,
yeah, it's whatever it is. And so look, they say analogies are a weak form of argument. And there are analogs. It's tempting. It appeals to the odd. It's, oh, this is like the .com or this is like the 29 peak. But there are similarities, and it doesn't have to get resolved. Now, the front page says that what's happening now is analogous and very similar to what happened exactly a year ago. But this time around, we're not going to get that tariff sort of kerfuffle to knock us down. But if we look at this and we can go, sort of chart by chart, this is remarkably similar then versus now. First chart. Second, literally just an increment over a 3-month period up from October to present, about 100 basis points plus or minus higher. Next chart, same duration. Again, this is from the 9th, so we've gone a little further here, but 48 sessions versus 49. Next iteration, right? Look how incredibly precise the sequence is. That last time around, it dropped 5+%. This time it dropped 5. Then it ricocheted. Next chart, they both about 6. Then it dipped again, right? Both about 3. Then it recovered again. Now, you see this kind of thing, and you're like, how in the hell? Listen, for hundreds of years at HBS, Harvard was on the CFA, they've rejected this stuff. And guess what? It turns out now they teach it at HBS. Even in the CFA, there's some time spent on technicals. Thank goodness, because you'd have to go to the ophthalmologist to say, no, I don't see there's any similarities. Of course there is. Now, the big question is, does it get resolved the same way? In principle, it's a bullish setup. Some people say that an ascending wedge or triangle is bearish, that you fall out the bottom. But the real truth is you don't presuppose it, you wait for it. Now, this week's weakness left us below that minor uptrend line in effect since November, but we're back into wedge. And so we shall see. But the point is that patterns repeat. This is obvious. It was rejected for years. Now it's embraced.
All right. Do me a favor. Let's go back a chart and look at this if we can, because this is on. My question to you is not what it says. It's how do you find this? Like, what is the work required to come up with something like this? How many charts? Well, because I'm curious.
Yeah, that's the fun part, right? So let's go to the first chart. I mean, and this is the idea. Remember, it's all, if we go to the very first chart with no annotations, or this one, that blank chart, even without those blue lines, that's why I use that expression, what my eye sees, because if you've spent a lot of time, 32 years just looking at charts, it's ridiculous. Imagine that grown man, 14 hours a day. But I like to think that I'm seeing things that are important. Could be dead wrong, could be inaccurate. But the first thing is to look and see for signs. This is if you were one of those in the movies, those the Native American who can find one little bent thing of grass. They say, oh, they went that way. And everyone else is like, really? It looks like, trust me, they went that way. Now, that's what expertise is. If you're going in for a checkup of your kidney, one guy the point is there are experts in life, and not to say, well, what is this a big story, how Carter Worth's an expert? It's not about that. this could all be wrong. But I think what can't be discussed or disputed or anything, it's inaccessible, is the pattern is remarkably similar. And the sequencing, right? The dip, the recovery, the dip, recovery. And so what it really means is that we're at a standoff and we're likely to get resolved soon. And there,
So,
if you make
now go to the next chart, because, just the duration. I mean, this is amazing. Again, and when I'm not stumble upon it is wrong. And I don't mean to use that term. No, go again, because that's the same number. Go again. Look at that. I mean, look at that. 48 sessions, 49 sessions, 5.36, 5 points. You have to say, oh my God, like history is clearly repeating itself.
That's right. And we don't know how the resolution, but what it does mean is there's likely to be, it's kind of low volatility. The VIX is low. Things are compressed. There's a bit of complacency. It gets resolved by a huge blow off, right? Up and out. There's, I don't know. And you can always make a narrative. Iran says, okay, how come we'll become democratic, bring the Shah back, you take all the oil, America. Right? Or something horrible down, meaning, but you don't need a narrative. There's always a narrative. What was the narrative last time? Trade, tariffs, and then all of a sudden the thing dropped 21%. There's always that. There's exogenous events that come along. But what we do know, or at least it's high probability, that after this quiescent period, volatility is coming. Now one can say, thanks a lot. That's great. Which way? That's subjective. My hunch is that it's not up and out, but we shall see.
All right. Now let's sort of do some single stock stuff, because there have been a lot of things that have happened that historically would have set forth a series of events to the downside that have not taken place. So I want to start with SanDisk, if Amanda can throw up a chart, because we've seen now a couple different times over the last couple of weeks these engulfing patterns that have taken place, where historically that type of move would have led to a significant downdraft, but it hasn't happened. And I look at this and say, wow, it is shrugging off what historically has been some drastic price action to the downside. Now, maybe today is the day that it resolves itself, because you have a gap open higher today. I think the stock opened around, 400 or so. So you open higher than the prior day. You're having a big volume day. This is a stock that typically trades 10 million shares a day, made a new all-time high. But when you see things like this, I mean, the level of enthusiasm is something to keep an eye on, I think.
Yeah, I mean, MU has it. CLAC. I mean, look at CLAC today. We could pull that up. KLAC. There's this is a very sort of embraced. It's $134 a share. It's a very embraced area of the market, and I mean, gapping incredible. The irony is, and we might have charts on this later on, is that the SOX is the beta trade. That's not the ironic part, right? We know that's the cyclical, but SOX relative performance to the tech sector peaked when the SOX came out, which is incredible, back in '94. And only just now are semis recouping their relative losses associated with the dot-com peak. So just briefly, in the past 7 to 10 months, have we exceeded the dot-com peak in terms of all of the relative losses associated with the crash and then the recovery. So it's high risk, high reward, beta.
Yeah, and I'm happy we have this up real quick, because you can see that little island all the way to the right. I mean, that little thing, I mean, doji star potential, island reversal potential, all these different things. But keep an eye on that. And the fact that, again, you're talking about a few standard deviations away. And I think Carter looks at the 150-day moving average. So, that's something that I continue to watch. Now, it doesn't appear as though anything's wrong on a day like today, where, the S&P up 0.6% or 0.7%, NASDAQ up about 1%. The Dow's up about 0.8%. Everything looks sort of hunky-dory. And, it's 69.72-ish. We're only 14 handles. Think about that, from the all-time high, and we're approaching 7,000. So, you look at this and say, well, everything is just fine. But below the surface, there's some technical things that are absolutely worth discussing. And that's why we're having a conversation now, Carter.
Right. And then it's an important area of the market, right? The SOX itself is making all-time highs, and the equal weight SOX is even outperforming, because you've got a big name like NVIDIA, which is in a bit of a stall and so forth. But again, there's long cycles to this, and this is really, as of now, still just a recouping of relative underperformance.
You're finally starting to see some activity in the energy stocks. And if Amanda can put up like a 5 or 6 year chart of ExxonMobil, and this is something that I've been saying for a while, and I think you've agreed with. You've had this sort of sideways action since late 22. It's been in this sort of 105 to 120 range, and I thought it was going to resolve itself with a move to the upside. And this reminds me, and you may remember it, of sort of the small caps a couple of years ago when they went sideways and then finally subsequently broke out. I look at Exxon and say, okay, maybe we're finally have taken out that sideways action and we're starting to get to new levels. When you look at this, forgetting about what it is, just technically looking at it, am I right in my assertion?
Yeah, sure. Exxon and the whole sector. Remember, it's the number one. If we did this same chart for XLE, which will put this in context, and you do 10 years and then even longer, but let's start with 10. What we know is, of course, it was the single worst area, bar none, of the 11 GICS sectors in the 1920 period. Of course, there are no boats, no trains, no planes, no cars. It's all just nobody moving. And then it's the single best theme of all 11 sectors in 20 off the lows and 21. And so now this big consolidation in principle, that's the setup for a breakout. Now, you don't have the kind of breakout that you get from a theme or area that has real growth, right? These are basically bonds. There is no real growth. They're high-paying dividends, and they can get re-rated higher in terms of valuation, but you're not likely to get something that implies, well, gosh, this is going to go to 70, 80. It doesn't work like that. But certainly playing for the breakout, which is normal, and playing for like sort of high 50s. Now, if you did this on a 20-year basis and go back as far as the data will go, you'll see that we're just now, and there it is, approaching the 2014 level. So one has to assume that it will take that out and then some. And so that's price objective to my eye, by my work, is about 57, 58.
All right. So people are asking about the small cap since I brought them up. And this is from, I believe, situation_0. Man, I can throw the question up. Can Carter take a look at the IWM? It seems to be running here. And yeah, it absolutely is. And, the sideways action I talked about was a couple of years ago, and then it resolved itself. And I think you're going to see a similar thing. I mean, my eye will see the uptrend from the April low. Amanda can draw that trend line from the April low and connect it to the sort of the late December. And you can see where theoretically support's going to come in. Draw that and then extend out. So you're going to see the support for that is basically going to be the 150-day moving average. You bring this up all the time. So the trend line is, you can actually make this a trend channel if you want, but talk about the IWM.
Yeah, if you go back, we're just now taking out the 2021 highs, which is incredible. So there it is, 21, 22. And so, the move off the tariff plunge low, 175 to essentially, 170 to 270 here, is extreme and a bit stretched. The move from the 2021 peak is we've done nothing, right? It's all about where you want to start the meter or start the storyline. If something has made no progress in 5 years, that's the case here, how could it be extended? And yet on an intermediate basis, the April last year to January this year, sure, one could say stretch. Both things are in effect. I would have a large long here and then having calls written against it.
Gold and silver continue to do their thing. You've written extensively about this. You've been right about this most of the time. And when I say most of the time, probably 80% of the time. But you look at what's been happening over the last couple of weeks, and forget about what it's telling you. How long do you think this can last? And I've said for a while that I think you're going to see triple-digit silver. We're approaching that. Gold, the sell-offs have been very short-lived. Talk to me about the precious metals through your eyes.
Yeah, there's sequencing here too, and on an intermediate basis, we're extended. I would hedge aggressively. The long cycle, there are plenty of people making the case for silver being, again, 100, 200. For silver to go back on an inflation-adjusted basis to exceed its Hunt Brothers peak of 1980, silver has to double from here. So gold only this past year exceeded its inflation-adjusted highs, and now is above those. But silver would have to, again, double to get back to even money, meaning having not been a negative proposition adjusted for the cost of inflation.
Which I don't think, by the way, I will tell you, I don't think it's all that far-fetched. I mean, we've seen, not that people watch these things, but we've seen palladium, which nobody talked about for years, all of a sudden became a very important industrial metal. So I don't think it's out of the realm of possibility to see silver with that type of move. And again, think the fact that we finally took out the prior all-time highs in the form of just price, not adjusted for inflation, I think it's very encouraging. So I continue to sort of think silver's going to do its thing. Let's sort of segue a little bit to something near and dear to both our hearts, and that's the TLT. And this is the channel that we've drawn. And Amanda, you can pull this one up as well. You have this uptrend that's been in place in the TLT effectively since the April or so, the May low, let's call it the May low. And then you have this downtrend that's been in place since the October high. So you have this pennant formation that I don't know if it means anything to you. That's what I've been looking at. And I think the ranges are going to continue to get smaller and smaller, and it's going to resolve itself. I think you think it resolves itself, excuse me, to the upside. I think it resolves itself to the downside. That's what makes markets. But am I looking at this the right way?
Yeah, it's just a standoff, and that's the lines typically, present themselves, and they, not to say they're obvious, but they are what they are. And so this is, there's nothing in me. A lot of times I get, incomings from PMs. What do you think of this one? What do you think of that one? That's the 90% of my day. It's almost like a jukebox, and I say, don't like it, do like it, or here's the reason. But the pair of twos designation is meant to, meaning, to say hold meant something on Wall Street. And the reason why I not came up with the pair of twos, but it occurred to me that is a better answer, is that hold is a euphemism for sell, right? Of all S&P 500 stocks, for instance, each one on average has 10 analysts covering it, right? So you get 5,000 buy and sell recommendations. You know how many stocks are sell rated? 5%. People say hold when they mean, well, we really would sell it, but we don't want to say that. So hold, a proper hold is a proper hold, stock in an uptrend, a currency index, a commodity. This is meaning there's no discernible immediate opportunity to be long or short, right? So those words are discernible. I don't see it. And immediate, meaning there might be a 10-year opportunity or 7 months or 12 years from now or 2, but immediate, meaning is this about to inflect, right? Do something versus, for instance, look at BABA. If you pull up BABA just to make a point, BABA comes down and BABA hits its 150-day. And then bang, that's a discernible immediate opportunity, right? And it's done once. I don't think we have that in yields. And that's one of the reasons I think everyone would agree that the equity market has been so calm and quietly confident. The cost of 10-year money is literally nirvana. It's not 6, it's not 2, it's 4%, 4%, 4 and a quarter, 380, 4. Everybody loves it. And that can't stay there forever. Something will come along. We shall see. My hunch is lower rates, but for now, it's just rates are what they are. They are
what they are. Now, people love the Carter Worth bearish to bullish reversals, and you and I both spotted one in the form of Schlumberger, or now SLB Corp, earlier this year.
Yeah, that's
at some point last year. The years have changed, but there you go. And you can see the downtrend that we're in was finally broken. The 150-day moving average is clearly now pointing to the upside. Maybe you get a back and fill here. But this was sort of a textbook bearish to bullish reversal.
Yeah, and energy. So these lead, remember, the integrators are slow moving. They're only now coming to life. Most of these bottomed months ago. Look at an APA, for instance, well before Schlumberger. A lot of these things have curled up. See, they make the April low and they keep going. So it's the cyclical names, drillers, within the space. And then what happens, and it's often the case in every sector, the sort of sleepier, bigger, slower moving names come to life. So you've had the bearish to bullish reversals going on for months in the drilling and oil service space. Look at a Seadrill, SDRL, just pick a small one because Apache and Schlumberger, this kind of thing, all bottomed in April. Now Schlumberger goes and almost makes the new low back to Schlumberger. It revisits the April low, SLB. So, and then it comes back aggressively, but it's the Chevron. Look at the CVX move. That is a lot more cap, and that is literally a straight up. Now, what to do with that? That's likely to back and fill here. You don't just go from, if you do the here and now, you don't go from 145 to 170 and just keep going. You back and fill typically, and then you can go on for more.
And I think all these names are starting to show their hand for the first time in a while. So I'm glad we pointed that out. There's some other ones that a lot of people are asking, but UPS is a name that I think has hit your radar screen. And if Amanda wants to do a longer term chart, this is something we've talked about. We recently traded down to the remember the spring of 2020. I think we all remember what was going on. Well, UPS traded right down to that level, and now it held, and now it's bouncing. And that downtrend line, which you can draw from the 2022 high, we're probably approaching that and probably getting ready to break out. I mean, this is one that I think you got to watch very closely going forward.
And it's all value, right? That's the key. It's all people, as people have come out of Apple to some extent. And if you do another cyclical, look at Dow Chemical, DOW, same time frame, you'll see that it retraces right to its COVID low and starts to pivot. So it's reference points where you start to base and bottom. Is it a former high? Is it a former low? Are you now putting in what would be called the beginning stages of a bottom? Again, people rounding bottom, base, the best nomenclature, not because I inherited it from a teacher mentor, is bearish to bullish reversal. It describes the precondition, and then it describes what is currently developing. It's a bearish to bullish reversal buy.
And let's throw UPS up real quick, because I agree with you on Dow as well. But the UPS, that trend line, so it suggests the following. Maybe we trade up to the downtrend line, which probably, if Amanda can draw that real quick, probably comes in around 120-ish or so. We'll see what happens if and when. Logic suggests we stop there. But I think what's going to happen is you stop, maybe back and fill, and then this is one that's going to surprise people to the ups. I'm right. 122-ish is probably where, off a time decay, is where it comes in. So speak to how you would view, am I looking at it the right way?
Well, they're all identical. That's the point. And that's the point of patterns. It does the human condition is to try to read into, is UPS, how's their business to FedEx? How's DHL? What's package? Oh my God, what does that have to do with Dow Chemical? It's not about that. It never was. And in fact, again, just to make this point, because in fact, the original chartists didn't have anything to go on except the insight and genius that they were 100 years before their time. Now it's ones and zeros. So all of these big quant machines and neural networks have proved it. They're doing it a different way, but patterns are everything. The comfort blanket is to say, well, UPS has this, and Dow is going to take some market share from DuPont, and so forth and so on. Forget all that.
Yeah, and I'm going to want to look at Microsoft in a second, but we have a bunch of questions about the XLP. That's the Staples ETF, and people are sort of pointing out that maybe this, maybe this is on the verge of something. That what I'll tell you is, we're up against levels that we last saw in the fall of 2024. So you're at some pretty important levels here, Carter.
Yeah. So the big one, Procter, is the big weight. Walmart's also in there. But if you look at the more here, sort of 1 year chart, this straight up move is also straight up in Exxon. It's the same thing. It's a straight up in Walmart. Look at Walmart. So it's not, and then look at Procter. Those are big ones. This strength straight up in Procter, 3, 4, 5 tick days, again, Exxon, is the reciprocal of MSFT and Exxon. All of that, it's highly defensive, big balance sheets. Now look at Microsoft, all right, or look at Netflix. It's the exact opposite, right? So it's rotation, it's money flow. People know that there are risks to the big sort of marquee tech names. Look at Meta. I mean, it's the equal and opposite. Money coming out, money going in. Poor action, good action. So the question is, how much further does this continue? It's not new. That's the thing, right? Meta peaked in October. Apple peaked. Microsoft peaked months ago. And what's happening there? Look at that. Apple's peak is Microsoft. That's 6 months ago. The nascent move is the move in Procter, right? The move in Exxon. And so presumptively they have more to run. So to the question, XLP, I would do it. Even CL's move. Look at CL. Correlated straight to its 150-day, and so those are big moves and large cap.
Let me ask you this about Microsoft, and let's drill down a little bit. Obviously, there's been a significant underperformance since the fall. We all can see that, and it's doing so, without a lot of fanfare, because I think the broader market is sort of taking all the headlines, but. Microsoft, a flattening 150-day. I think we all see that. I don't want to say it's sloping lower yet, but I look at this, Carter, and say that gap on the downside sticks out like a sore thumb. And you've recently written about IGV. Obviously, Microsoft, a big component of that. Is it ridiculous to think we have a gap fill in our future?
I don't know. I mean, it's bad action all the way around. Even the initial August gap, it closed on the low. That's a reversal in and of itself. It did it again in November when it gapped up, can stick its landing, if you will. The risk is a break here. I mean, look, there's no valuation is the single worst timing tool. We all know this. Let's look at Oracle. I mean, nobody knows what anything's worth. I will just give you the numbers right here. Before, when Oracle was trading it in September at 250, Wall Street's price target, 12-month hands of 45 analysts, was 270. When it gapped up, collectively, they changed the price target to 380. And now it's back to 200. They don't predict price, they react to it. Value add zero. How can this be? How can Oracle go from 175 to 350 to 175 all in the 9 months? Because anything's worth anything. Stick with the charts. And this doesn't look good.
People are asking about Novo Nordisk. For you fast money enthusiasts, you'll know that Novo is the N in my junk. Longer term charts suggest we traded down to the levels we saw in 2022, seemingly have held, or seemingly basically potentially another bearish to bullish reversal. This looks like the Dow chart, looks like the UPS chart that we threw up. The downtrend that's been in place for a year and a half or 2 years seemingly is being broken. Thoughts on Nova, just technically here?
Yeah, early stage, making the turn on get in motion.
Somebody's asking about K-Web, which sort of, again, you mentioned obviously Alibaba. K-Web is sort of it's not going to look as good, but this is one that potentially could get on its source as well.
Yeah, I would do it. Not as robust as and sort of encouraging as Baba, but the premise is that it's a multi-year bottom if we look at the 5-year chart, and that the risk reward is favorable, that it's the kind of thing where if it's wrong, we waste time, 32, 38, 36, and it just kind of doesn't do it. But if right, 52, 62, that kind of, forget about 100, higher. But the third scenario is that it's all of a sudden 20 and it makes new lows. I don't see that.
We had Katie Stockton on Fast Money a week and a half or so ago, and she thought the charts in Apple looked as if we could trade down to about 243. I agreed with her, by the way. And again, like some of these other names, Apple's been an underperformer for the better part of a month and a half. And I don't want to make a huge deal out of it, but thoughts on those levels, because my eye can see the same uptrend from the April low. Connect the April low with the August low, and you'll see where that third point is going to come in. It probably is actually a tad higher than that, but you'll see what I'm looking at.
Yeah, lower. And now a question is how. I mean, there's no real support to speak of. No reason it can't get into the 235, 230 even. But here and now, it always gets down to this: buy, sell, or don't play. I would be selling if I had it long, and for short sellers, I'd have a bet on.
So there are going to be people that say you never bet against Apple. So I would, if I'm playing the home game, I have this chart up 24/7, and I will continue to watch this thing. And what I'm hoping for is a move that we've seen in a couple other names that we mentioned over the last half hour, where the stock trades down to the 150 and bounces strongly off it. And in this case, by the way, the 150 and this trend line that we've drawn are going to be exactly the same thing. So, is that a fair way to look at this going forward?
Sure. I mean, the Apple, look, this is one of the great, if not the greatest commercial enterprise of all time. Going into the history books with, the Model T Ford and, AT&T. Wow, I've got a telephone. I can talk to someone across town or across the world. Before that, it was letters, right? The question is it an alpha proposition from here? Probably not. Its relative performance to the tech sector peaked in 2022. Here we are, 2026. So it has not been on an absolute basis, one has made money, but it's the opportunity cost. One has made less money than one could have if choosing among other areas within technology or the entire technology sector itself.
He is the great Carter Worth. Let's throw up the slide where you can find his work. I wanted to keep this tight to a half hour today, and I believe that I have. But Carter Worth charting, old-fashioned technical analysis, nothing slick, people, other than my hair, just charts. Carter, I dig you. Thanks for being here.
Great.
Folks, we'll be back next Tuesday. Monday is a holiday. Dan will be back. Enjoy the long weekend. We'll catch you later.